If you are 65 or older in Canada, there is a good chance you are paying at least one charge right now that you may be able to reduce, avoid, or even eliminate completely. And I am not talking about some complicated tax loophole available only to wealthy retirees. I am talking about ordinary charges connected to your bank account, prescriptions, dental care, property costs, tax filing, and even something many Canadians pay for online without realizing they can get it for free. But there is one important warning before we begin. Being a senior does not automatically make you exempt from every fee in Canada. Some programs depend on your income, some depend on your province. Others require you to ask your bank or apply before the charge disappears. That is exactly why people miss them. And make sure you stay until number 1, because a major banking rule changed in 2026. A charge that used to cost Canadians around $45 to $48 in many cases is now capped at a fraction of that amount. First, though, number 7 is one of the easiest expenses to stop paying. Have you ever seen a website offering to show you your Canadian credit report if you pay a monthly membership fee? Be careful. You do not necessarily need to pay for access to your basic credit report. Canada's 2 major credit bureaus, Equifax and TransUnion, provide ways for Canadians to access their credit reports for free. That matters even more after retirement. Imagine you are 71 years old. You are no longer applying for new credit every few months, but you still want to make sure nobody has opened an account in your name. You see an advertisement offering credit monitoring for $20 a month. You sign up simply because you think that is the only way to see what is happening. $20 does not sound like much, but $20 every month becomes $240 every year. Before paying for a subscription simply to see your report, check the free options first. And there is another reason seniors should check. Your credit report can help you spot accounts you do not recognize, incorrect balances, or signs of possible identity fraud. So the lesson here is not to ignore your credit. It is the opposite. Check it, but do not assume you must pay somebody every month just to access information that may already be available to you for free. And the next charge can be even more frustrating because many seniors pay it once every year without realizing help may be available. For many Canadian seniors, filing a tax return is not optional in practice, even when they owe little or no income tax. Why? Because your tax return is used to calculate eligibility for a number of government benefits and credits. But some seniors pay $50, $100, or even several $100s every spring simply to have a basic return prepared. If your income is modest and your tax situation is simple, stop before automatically paying that bill. The Canada Revenue Agency supports free tax clinics through community organizations across Canada. Volunteers at these clinics prepare tax returns for eligible people with modest incomes and simple tax situations. That does not mean everyone qualifies. If you own a complicated business, have unusual investments, rental properties, or a complex tax situation, you may still need professional help. But imagine a retired senior whose income mainly comes from CPP, OAS, GIS, and perhaps a small pension. Before spending money on tax preparation, it is worth checking whether a free clinic can help. And there is a bigger reason this matters. Skipping your tax return because you cannot afford preparation can be much more expensive than the preparation fee itself. Benefits and credits may depend on your annual tax filing. So before you say, my taxes are simple, but I guess I have to pay someone again, check the free option. Now, number 5 is where the savings can become much more significant, but the rules are different across Canada. Prescription drug programs are provincial, so there is no single senior prescription rule that applies identically from Vancouver to Halifax. But this is exactly why you should check the program where you live. Here is one powerful 2026 example from Ontario. Ontario residents aged 65 and older may qualify for the Ontario Drug Benefit Program. Under the regular senior rules, There can be an annual deductible followed by a copayment for eligible prescriptions. But lower-income seniors may qualify for the Seniors Copayment Program. For the program year beginning August 1, 2026, qualifying seniors can have the annual deductible removed and their copayment reduced to no more than $2 for an eligible prescription. The income limits were also updated for the new program year. For a single eligible senior, the annual net income threshold is $25,480. For an eligible senior couple, the combined annual net income threshold is $42,290. Think about what that means for someone filling several prescriptions throughout the year. A few dollars on one prescription may seem insignificant, but multiply the difference across refills, multiple medications, and 12 months, and it can become real money. If you live outside Ontario, do not assume this section has nothing to do with you. Instead, ask this question: what senior prescription assistance or low-income drug program exists in my province? That one question could be worth much more than another generic senior discount. And number 4 is a charge that can be thousands of dollars a year. Owning your home does not mean you should simply open your property tax bill, pay it, and never investigate whether there is assistance available. Property tax support varies by province and municipality. There is no universal Canadian rule saying everyone over 65 stops paying property tax. That would be false. But there are real programs that seniors frequently overlook. Ontario, for example, has a senior homeowners property tax grant for qualifying low and moderate income senior homeowners. For 2026, the maximum grant is up to $500, depending on eligibility, income, and eligible property tax paid. Ontario also has the energy and property tax credit. For eligible seniors, the maximum 2026 Ontario energy and property tax credit can reach $1,488, depending on circumstances and income. And Ontario is not the only province with homeowner programs. Canada's provincial credit system includes different homeowner and senior-related measures in places such as British Columbia, Manitoba, New Brunswick, Ontario, and others. Here is the mistake I want you to avoid. Do not hear the word credit and assume the government automatically knows everything you qualify for. Some programs require information on your tax return. Some require an application. And eligibility can change when your income, marital status, age, or residence changes. So when your property bill arrives, do not ask only, "How much do I owe?" Also ask, "What senior homeowner grant, rebate, tax credit, or deferral program exists where I live?" But the next expense can easily reach hundreds or even thousands of dollars. And a major federal program is already open for its 2026-2027 benefit year. Dental care is one of the expenses retirees often postpone because it can become expensive very quickly. A cleaning becomes a filling becomes a crown, a broken tooth becomes an emergency, and suddenly a senior who thought they were saving money by waiting is facing a much larger bill. The Canadian Dental Care Plan, or CDCP, is designed to make eligible dental care more affordable for Canadians who meet the requirements. For the 2026-2027 benefit period, applications are open. To qualify, you must meet the program's conditions. You must not have access to private dental insurance. You must have filed your Canadian tax return. You must be a Canadian resident for tax purposes, and your adjusted family net income must be below $90,000. Now pay close attention to this next part because this is where people misunderstand the program. CDCP does not necessarily mean every dental visit is completely free. If your adjusted family net income is below $70,000, the CDCP copayment percentage is 0 on the CDCP established fee. Between $70,000 and $79,999, the copayment is 40%. Between $80,000 and $89,999, it is 60%. And even if your copayment percentage is zero, your dental provider may charge more than the CDCP established fee, which can leave you with an additional amount to pay. So before treatment, ask your provider a very specific question. How much will CDCP pay, and exactly how much will I pay out of pocket? That sentence could prevent a very unpleasant surprise at the front desk. Now we reach the final two, and these are important because both involve your bank. Open your bank statement and look for one line. Monthly account fee. Maybe it is $4. Maybe it is $12. Maybe it is $16 or more, depending on the account you have. Now, ask yourself this. Why are you still using that specific account? Since December 1, 2025, Canada's modernized low-cost and no-cost account commitment has been in effect at participating federally regulated financial institutions. All Canadians can access qualifying low-cost accounts with a monthly fee of no more than $4 through participating institutions. But there is an even more important rule for some seniors. Seniors receiving the Guaranteed Income Supplement, or GIS, are among the mandatory groups eligible for a qualifying no-cost account at participating institutions subject to eligibility verification. That means zero monthly account fee for the qualifying account. Not every senior qualifies simply because they are 65. The key point is GIS, and your current bank account may not automatically switch itself just because you qualify. So if you receive GIS and you are still paying a monthly checking fee, contact your bank and ask, do I qualify for your no-cost account under the federal low-cost and no-cost account commitment? Do not simply ask, do you have a senior account? Those are two different questions. A bank's regular senior package might have one set of conditions. The no-cost commitment has specific eligibility rules. And now we come to number one, the 2026 change many Canadians may not have noticed. This one changed on March 12, 2026. An NSF fee, or non-sufficient funds fee, can happen when a payment tries to come out of your bank account and there is not enough money to cover it. Before the new regulation, these fees commonly ranged around $45 to $48. Think about how painful that was. Maybe your pension deposit arrived one day later than expected. Maybe an automatic bill came out earlier than you remembered. You were short by $15, and then your bank added another $45 or more. As of March 12, 2026, federally regulated banks cannot charge more than $10 as an NSF fee on a personal deposit account. There are additional protections too. You cannot be charged another NSF fee on the same personal deposit account within 2 business days of an NSF fee. And an NSF fee cannot be charged when the amount of the overdraft is less than $10. This protection is not limited to seniors, but seniors living on fixed monthly income may feel the impact more strongly because the timing of pension payments, rent, utilities, insurance, and automatic withdrawals can leave less room for error. So check your bank statements. If you see an NSF charge after March 12, 2026 that appears to violate these rules, do not ignore it. Contact your financial institution and ask for an explanation. And that brings us to the bigger lesson. The most expensive assumption in retirement is often this: if they charged me, I must owe it. Not always. A bank fee may have a lower cost alternative. A credit report may be available free. A simple tax return may qualify for free help. Prescription costs may have an income-tested program. Property costs may be offset by provincial credits. Dental expenses may qualify under CDCP. And a banking penalty that once cost nearly $50 is now capped at $10 under the federal rules we discussed. Your action step today is simple. Take out your last bank statement, your latest prescription receipt, your property tax information, and any dental bills you have been postponing. Check them one by one. You do not need to solve everything today. Just find one charge and ask one better question. Is there a senior, low-income, provincial, or federal program that reduces what I am paying? One correct question can sometimes save more money than clipping discounts for an entire year. And remember, programs differ by province and personal situation, so always confirm your eligibility with the relevant government department, bank, pharmacist, or service provider before making a financial decision. If this video helped you discover even one charge worth checking, subscribe for more plain English updates for Canadian seniors. And tell me in the comments, which province are you watching from, and which of these 7 charges surprised you the most? Because in the next video, we are going to look at another group of expenses Canadian retirees keep paying every month, even though there may be a cheaper way to handle them.